All right, so welcome everyone once again to our weekly macro discussion. I think it's a pretty, as we were talking before the recording started in informal manner, that this is pretty much will be seen as a historic day, as we always in WhatsApp we were discussing yesterday. Basic idea here is that this was the last Jackson Hole conference and the press conference from Powell. It's almost like usually they see it as their legacy because this is where means they will go into private life after this. So of course, we were debating whether it is hawkish or dovish, but the market's verdict has been that it is dovish. Market has taken it positively. SPX is almost back to its all-time high. Yields are dropping. Rate, it's almost the way Powell explained it. It was mostly that there is a pivot here. There is a need for supporting employment, which was the crux, and the message which everybody's taking. And right before this, we were debating around the 2%, which is removed. And there were two discussions, which let me just summarize. So, of course, it's subjective terms, but basic idea is that now the 2% is not a hard target. That's what market is reading out of it. On the other hand, he re-emphasized that there is a dual mandate in controlling inflation as well as unemployment. And market is right now reacting to removal of 2%, which is again, we have discussed many times. It was arbitrary. It was never there in any Fed official statements for the longest times. And like I was just researching quickly before this call that the first time 2% was officially used was 2012. This is just 13 years ago. Bernanke brought it in his last Jackson Hole press conference. Before that, it was never documented as a target. It became the target recently only, and by the way, inflation was never a target before 1977. So if you go back 40 years of Fed before that, so we need to understand in the context of the history, we need to understand that things change and they are never the same. So market is right now reading that as a victory for dovish people or the bullish people, that 2% target is gone. Yes, we can always debate about what his intention was, because that is not going to be relevant. It's his term is remaining, very little term is remaining. He has agreed to the pivot. He has mentioned that employment is the kind of the focus. So more or less, September rate cut is locked in, and provided how bad August the employment reports come, market may start betting on 25 versus 50 basis point, because if let's say the numbers are revised again downwards or the numbers are pretty bad, I mean, there will be a call for really 50 basis point, because now that inflation is out of the window, given the scenario that inflation target is well anchored, that's a term now they're using now versus 2%. They're talking about well anchored inflation. And so nobody says that 2.5 or 2.8 or 3% is not well anchored. So that's a flexibility which Fed got now. So let's quickly look at the chart, and we can go into this other details later beyond it. And let's start talking about where the markets are. So as I was talking, so always look at the bigger picture. Means one thing we talked about how the Fed keeps changing, but let's look at also from a chart perspective where we are. Means we have gone through all this correction earlier. So we were always talking about how the market were deleveraged earlier this year, one of the biggest correction in recent times, probably since COVID. And I think that's the case. And then we had broken out as soon as the whole Liberation Day drama was over, and we had a US-China on the table. Since then, we have been just living this, positive news cycle of tax. We're living the positive news cycle of all the trade deals. And we hit the highs on August 1 tariff when we had another minor correction. And recently we made a new high and went down. Now, the fun part is, even though the market was kind of wondering what will happen at Jackson Hole, now we are calling it Jackson Hole pivot. The reason being, market is really reacting that way. The rate cuts are being expected, as we discussed. So let's call it a pivot again, because we were in a pause state after all these rate cuts this year, and market is back to all-time highs again. Means very close, maybe a few points down. On the other hand, what we are seeing is the same situation. Nasdaq is always, as you can see, correlated. We still have room for tech stocks. We have not made almost, just like SPX is back. So what this also tells us is market was more correcting in pieces. If you see, and if we were analyzing some data at our end, most of the correction in last few days was higher in tech stocks, which was impacting. And as you know, SPX is pretty highly weighted by tech stocks. So what happened in today's correct move up is that already other stocks were getting allocation. So market. So what does it mean? It means that the wider indices are recovering faster. That means market was already rotating. Market was not sitting out of the out of money on these. They were just concerned with the hawkish nature or whether the rate cuts will happen or not, because as Powell also explained in his statement, we are fairly restricted in terms of the monetary policy. We are, even after, if you say another 25 basis point cut comes in September, we are still talking about 4% rates, which is pretty high from recent past standards. So in other words, okay, let's come back to the chart. What is the opportunity here is that SPX is sitting on almost all-time high, while the tech stocks are not yet recovered. So that's the opportunity for the market, and we will be watching carefully on what happens next week, because over the weekend there will be more interpretations of what Powell said. People will react to whether this was a fair assessment by the market or not, because right now it was a more of a knee-jerk shorts covering their asses and saying, okay, let's go and cover our positions. Second thing, which we cannot forget, is that NVIDIA is reporting next week. We know that all the AI news is already in because of what the hyperscalers did and all that. And NVIDIA is already way up from that earning cycle. But there is still, this is the bellwether, this is the highest market cap company, it is the highest weight in the indices. So there is a big impact. How market react to NVIDIA earnings next week will be critical. And I think though that is another big thing pending, which can make or break. Now, if you go back to the charts, it's a pretty interesting situation. Now we are looking at SPX already sitting on all-time highs. NASDAQ has room to run, and if NVIDIA really boosts all the tech stocks, we are talking about a technical breakout where, again, we get into blue sky zone because we are already at all-time highs here. So this is where, irrespective of all our views, what market is telling us is that there's a lot of buying pressure. There's a lot of technical reasons to understand that we are not done yet in this rally. While I think just like NVIDIA can break out or can help us get to new highs, NVIDIA can also disappoint. And that's something which nobody knows, because of course the expectations are pretty high after all the hyperscaler earnings and spending increases. But there is this big question mark. Even today, the news was the H20 shipments have been stopped by NVIDIA. There are some whisper news. There are a lot of rumors in both directions, and there's a lot of guidance expected from NVIDIA on what is happening on the China front. Because if you remember, most of the concerns which started on NVIDIA and there was sell pressure on NVIDIA when there was this whole ban on their China shipments and so on. So not just how they will report this quarter earning, there will be a lot of questions around what's the status of starting back their shipments to China. So all these are going to decide the tech stocks. It can impact a lot on how the markets behave next week. Coming back to the yields, I think now this is where we go back to the policy. So yields had been indicating softer stance, and we had seen this. Like, if you, again, I'm purely looking at technicals right now. The yields were on the downtrend since start of this year, and even though we had many scares, but we are seeing. So what I always say is that there is a slope downwards. Can you please mute everybody? All right. So if you look at this downward curve, we call it as a trend lines. There is another thing is every last new trend line is sloping further and further down. So this is what I was drawing, and I was trying to figure this out. So what you're seeing here is we are not even, and if you look at the 200-day moving average on this, we are not even testing that. And this time, today's news brought it down further. So what we are seeing here is that the short-term rates, usually if there was an inflation concern from the market, should have not given us such a big boost on the long-term rates. But what we are seeing here is market is actually nodding in favor of not only short-term rates, but a general pivot from Fed into much longer stance of softer rates. And that's what I think the first reaction is. Again, as I said, the rates can change, but what we are seeing is, I'm looking at 8 to 9 months data here. It's not just one day or what happened today at Jackson Hole, but the yields are already dropping. They're trending down. So this is what we have been talking about in this call all this time. So I'd say this was another signal which the smart money and the money which is, as we call it, as a real money, like the bonds are the real money, not the stock is the paper money. This is what they are signaling, that they are going towards a softer stance, a need for the softer stance, need for lower rates. That means they are seeing some kind of slowdown. That means employment numbers which are not lying or whatever. We can question them whether the data is correct or not. But basically, the bond market is saying that we are in for lower rates. So again, there is another line of thought which says, why is that happening? That means, are we expecting slowdown in economy? If we really believe the unemployment numbers, we should be more worried, right, that the earnings are going down. So when I say, so one thing is calling Fed dovish or hawkish, but one thing we should not forget is, what is the meaning of dovish? The meaning is that you are concerned about economy, you're concerned about unemployment. And right now, market is celebrating. So that can be another reflection. So maybe, yes, he was dovish. Maybe, yes, we will see lower rates, just like the yields are predicting. But does it mean, are we slowing down on earnings very soon? Is unemployment a leading indicator of companies not hiring because they're concerned about earnings? All that is still a macro way we have to analyze, and we need to figure out how market digests that data. So that is another thing to watch out. So unfortunately, we have started believing, the market has started operating in a way that bad news is good news. So unemployment numbers or the job number coming down, if the unemployment is increasing, people say, who cares? Interest rates are going down, let's buy. So this is not usual. This is only happening because of, again, I keep going back to the same thing. We're talking about money printing. When there is so much money in the market, now all you care is, I keep buying risk assets as long as rates are down, as long as there is, yields are down. And that is what I think is a very easy trend. Can it reverse? Yes. Can we start seeing shrinking in earnings and so on? Yes. But that's why, again, we are saying that it's an AI-driven rally. Wider markets are never into it. AI rally will still get boosted because money is getting cheaper. Long-term yields are falling. Rates are expected to fall. So that's the take I have, that yes, in short term, it's bullish. Long term, nobody knows where the top is and when the market starts getting concerned about earnings. But in general, I think today's assessment is that yes, we are back to bullishness, and that's where we stand after Jackson Hole pivot, as we are calling it. And that is something which we will have very interesting next week. That's my summary, where we see whether we break out on SPX again, whether tech stocks follow up and catch up to SPX and make all-time highs again. And most importantly, later in the week, when NVIDIA reports, whether we can sustain this trend and whether NVIDIA boosts this trend or whether it clips the uptrend. That will be something to watch out for if you're trading or if you are interested in following where the market is heading next week. So I'll take a few questions. I have a few in the chat, and then I have one more topic on what is going on in. So I think one question I see here is the interpretation based on ground level data. So I hope I covered this. So please make sure that if you have any follow-up question, you can let. So the data is right now, as we saw, is telling us that market is feeling great. Interest rate cuts are almost like being priced in. And when I say, of course, we are looking at 10-year yield, I was also looking at the 2-year yields and 1-year yield. Most of them are pointing to now more than 2 rate cuts, probably 3 rate cuts. That's where market is heading towards within, I think, next 3 to 4 meetings. So that's where market is now positioning this, which means that that's why, again, we are saying that it's a pivot. Market is taking it as a pivot, that we are out of the pause and we are probably going on a not just one rate cut in September, but on a rate cut cycle, which is multiple rate cuts. And as we all know, that Powell's term is ending soon, and there is already a discussion about a shadow Fed governor to be installed. Trump is already bullying another Fed voting member into resigning and so on. We don't need to get into that. But basic idea here is that Trump would look to control and create announcement of this next Fed chair and start signaling even further lower rates. So I think market is aware of that. And when you have the first block removed, when you know that Powell is now talking about pivot himself, I think that changes the game for the market, definitely seeing many more rate cuts coming and lower rates coming in future.
So Raman, so thanks for the interpretation. Yes, by ground level data, I meant more was like, the economic data. I've heard business being bad, prices of commodities, not food, etc., going up. People are watching that. and then unemployment, as in especially new grads, is tough. So those indicators kind of, and I agree with you. Probably this opens to like maybe 2 or 3 cuts.
Mm-hmm. No, I think so. Again, first of all, let's understand what is the ground level data and what is the, and we discussed this just now, that unfortunately this whole thing is driven by bad news. What is the bad news? That the unemployment is rising. The jobs numbers were revised in the last update, and this also got all this political drama around the BLS and so on. But basic idea here is simple, that the jobs are not being created and people are not hiring in a wider market. But again, let me actually share the screen once again, and let me show you that it was never a good economy. Stock market being good doesn't mean that we were in a good economy. And let me show you one evidence for that. This is IWM chart. Okay, this is the Russell 2000, which is the wider index. Do you see that we are right now almost trading at the same level, which is the peak of 2021? Now, can you imagine if you compare this with SPX, like where is 2021? Like you have to go way down of these highs of 2021. You're talking about such a huge move. So we are not really in a wider economy bull market. We are in an AI bull market. So when we talk about SPX, or when that doesn't represent economy, I would say you go wider and wider in the index, you see that what is the economy doing, and market is aware of it. And this is why, if you see, we were actually sitting on, this is the index, this is the ETF which tracks this Russell 2000. We were like almost at the low as recent as April, and we are still not breaking out even from the last year high. So what I'm trying to highlight here is, yes, the data is not great, but does it matter? Means if Google, Meta, Microsoft keep spending on AI, the weight of these Mag 7 is at in 40% of SPX. And when we talk about AI spending continuously increasing, what stops us from continuing to blow up this index further? Means there is no reason from a data. Yes, the I think one more data point I was looking at is the data center construction. Like, remember that when you say AI spending by Nvidia or Meta or Microsoft, they first need a data center building. And if you look at the real estate data, they're saying that data center construction is at all-time high. It's not going to be deployed today. If the construction is starting today, it will be deployed 1 year from now. You will buy GPUs 1 year from now. So the projections are not slow, that AI spending is slowing down. So economic data, we are split into world right now, AI world and no AI world. And this is another reason why we have to look at, I see a lot of people tweeting about, oh, market is all-time high, and we are expecting rate cuts, how crazy it is. But when you make policies, when Powell is talking about it, he doesn't care about AI bull run or SPX, right? That is not his job. He's talking about wider economy, and you're right, the ground level data is pretty bad. Most of the economy, and I keep repeating this, right? My strong view is, if ChatGPT had not happened, if AI was not where it is today, we would be in a very severe recession, and probably at 0% interest rates again right now. I mean, Fed would be boosting the economy. There is nothing going in the economy other than AI right now. For last 3 years almost, we were in a fairly restrictive environment, and the trickle down effect of AI means, of course, when data center buildings are built, when there are so many jobs being created, not just in the tech industry, but also in the construction industry and so on. So there is some trickle down effect which is helping, but it's not helping anybody who's not linked to AI world. And that is where I think, if you see, real estate markets were pretty slow. The interest rates being high is very restrictive for them. You see that a lot of other industries are struggling, like old industries. So that's where I think we are split in two worlds, and unfortunately, stock market doesn't care, because it's the index is built of tech stocks, and we all are happy investing in tech stocks. So as investors, it doesn't impact us. For us, the economy is great, but as if you are on the ground level working in non-tech sector, it's not funny. All right. So any other quick questions we can take? Because unfortunately, I have a tight stop today. So I want to talk about a couple of other things, which is, of course, everybody's interested in the digital asset side of the world. So we will have a quick look at Bitcoin charts and what is really happening there, because I'm very closely linked to some of these things. So first of all, Bitcoin has been weaker than SPX, and this is we have discussed multiple times that the correlation does not exist on a day-to-day level. It exists on a more, and also there is some there is some correlation in terms of money flow. So you will see some big jump today. But on the other hand, if you see, we are sitting on previous all-time high, which is a support level. We did talk about it in the last few weeks that we are consolidating between this new all-time high and old. And to be frank, it is slowing down right now. So what's really happening here? I get a lot of questions usually on chats and so on. So let me put it this way: that what is this boom about? We have talked multiple times about that this cycle. So if you are in crypto world, you know that every cycle is driven by some new trend. Previous cycle was like DeFi and all these memes and NFTs. Even before that, if you're old enough in the industry, you know that 2017 and 2018 there was this whole ICO boom. This cycle was driven by only one name I can say: MicroStrategy. The whole idea of crypto treasury, digital gold narrative turned into super machine of creating new asset classes, debt on top of equity and preferred shares and so on. So that was a big boost. And what happened ever since the last, means S&P, so what happened right now is that MicroStrategy has, the board has changed the way they generate money, and they have slowed down the purchases because they issued a statement that if the MNAV is less than 2.5x, we will not sell common stock. What that means is the biggest supply of cash coming in from the common stockholders where they were selling has dried up a little bit. So market got concerned. You're seeing some dip here. Second thing which is happening is, as you know, that Ethereum treasury companies have launched. And now this is the new shiny thing. This is more volatile. So whatever MicroStrategy was using in its favor, which is the volatility, and how to use that volatility to generate new asset classes, that's exactly what is happening with Ethereum right now. Not just Ethereum. If you are in this world, means I'm involved in right now in a Binance Coin treasury company, Solana treasury company. We did discuss. You can go review the debate around it. So I don't want to repeat that last week when we talked about these treasury companies. But what is the impact on Bitcoin? So my focus today is only on that. So you can go look at the YouTube recording from last week, but we talked about all these treasury companies. But I just wanted to highlight the factors here. So if you see in this today's move, and by the way, even earlier, Ethereum has been making new highs while Bitcoin is kind of consolidating. This is a typical rotation of capital because Ethereum was lagging all these years, and we got a new kind of asset classes now looking for a new shiny object, which is the treasury companies on all these Ethereum, Solana, and so on. So this is what is happening. To be frank, it is healthy because too many people chasing this whole idea of treasury. Again, I said we did have a detailed discussion on it last week, so you can look into that recording. But basic idea here is that all these things, there are some real cases like Michael Saylor did with MicroStrategy, where he created a very good ecosystem. He explains very well on what value he's adding. Then there are some Me Too products. Then there are some copycats. So there is always a quality of assets. So this is a new industry. And right now, and this is a great thing, I would say, for the industry to get tested here, where Michael Saylor is saying, let's slow down. We want to be responsible. And let me tell you what is the biggest kicker here. They are right now qualified for, I mean, my guess is they're qualified for S&P 500 because they came out with the earnings. And right now they're sitting on all the written rules of what you need to be included in S&P 500 index. He is already part of the NASDAQ 100 index. And the reason why I think they came out with this guidance for this quarter earning was because they wanted to give the committee the reasons that, oh, we are a responsible company, don't reject us just because we have no real rules around when do we do the ATM stock sales. And that is my interpretation of it. A lot of people are similarly interpreting it. And that decision will be very soon because every quarter the S&P committee review, or every month, I don't know exact dates. But as soon as they decide either in favor or against, their goal will be achieved. And I don't see why somebody like Michael Saylor will stop buying Bitcoin or stop selling ATM, because that was the whole goal. In fact, all the shareholders are almost not happy with him for stopping the ATM sale and buy. So overall, okay, so the reason why I'm going into this tangent of what is happening in strategy and so on is the Bitcoin is taking a pause because we had a consistent buyer who was buying at any price. He has taken a pause, and we are seeing the real demand for Bitcoin right now outside that big buyer. And the good news is technically we are holding the last level. So that means there is enough buying, as I have marked here, around the previous all-time high break. And technically we are not seeing any, breakdown. So that means that demand is there, irrespective of Michael Saylor buying or not. whether it is ETFs, whether it is other treasury companies. So Bitcoin is looking all right as long as it doesn't break previous all-time high. On the other hand, we are seeing how long this Ethereum boom lasts, because again, at some point the capital will dry up because there is some demand for it. And right now we are seeing all these other altcoins, and Ethereum is not alone. There are all other altcoins which are creating treasury companies. In fact, already Solana has 7 treasury companies, and Binance Coin just launched another one which is doing very well. So there are a lot of demand right now being created. So this is where my take is on what is happening in this space. And probably I get a lot of questions. I wanted to preempt those on what I think about Bitcoin right now. So I think it's a healthy thing. We are removing one big buyer from the market and testing out what is the real demand, which was not the case in this cycle. In this cycle, we always knew that whenever market dropped, Michael Saylor is going to go buy $2 billion worth of Bitcoin. So that is at least out of the, it's paused for now, which is a good test for demand of Bitcoin. And it's going through this cycle. And again, as I said, right, this is a trend which has some merit to it. I would say we can always debate about whether you believe it or not. But overall, what is happening here is all these crypto industries getting validated, and as we are seeing that when the debt market is willing to bet on it, when the all these preferred shares being issued are getting upsized, like when even the new preferred share STRC, which was issued by Michael Saylor, that got upsized by 4x. It is as recent as 2 months back. So demand is there from debt market or the preferred equity market. So I don't think that is a concern right now. And when you see that Ethereum, Binance, and all these Solana coins are able to raise money, that means that it's just a matter of people are just going after the new shiny object, and ultimately we will know whether there are legs to these kind of demand for other coins. While Bitcoin is, everybody knows that has established itself as the key digital coin. So that's where I think we see the whole Bitcoin world going, and what's going on in the digital asset world. If you're interested in learning more about treasury companies, as I'm very much associated with this industry for the last 7-8 years, we are doing a lot of private deals. So if you want to learn that, we can have a separate call. Do let me know, because I'm connected with the industry people very well, and I'm learning more about what's going on in this space. And would love to share more when I have something to share about it. But in general, I think from at this point, if you're only interested in Bitcoin price, that was my take on where we are going right now. So unfortunately, I have a hard stop very shortly. So I will probably take 1 or 2 quick questions if you have. So feel free to put it in the chat, or you can unmute yourself right now. All right. So if there are no other questions right now, I would say that, okay, let's going back to where the summary of today's call is. It was a big historic moment in terms of how we saw this Jackson Hole's conference play out. We, of course, as we discussed earlier in the call, that it will be debated over the weekend whether it was hawkish or dovish. A lot of people have their own opinion. Market has decided it was dovish. Market is excited about rate cuts, which are almost like now getting priced in. Because and the key here, which market is focusing on, is that the inflation 2% hard goal is gone, while they are still trying to keep inflation anchored. On the other hand, unemployment is being emphasized again as their primary goal. The second piece is that we have a huge earning next week, and a follow-up of the today's move. So early next week, tech stocks movement, whether they follow up and how they trade into NVIDIA earnings, will be the most critical for SPX and NASDAQ. And finally, as I said, Bitcoin is going through a testing period where the biggest buyer is gone, and then we have this whole consolidation going on right now. But I think overall, the industry-wide crypto is actually taking a bigger leap with altcoin treasuries, and that is there's insane amount of demand, and the kind of money flow going into that is really probably taking some money out of Bitcoin right now. But that doesn't mean that there is a lack of capital. What we are seeing right now is that there is actually even bigger demand right now for overall crypto treasury, and this trend is far from over in terms of building bigger and bigger digital asset treasury companies. So that's the summary from my end, and have a great weekend, folks, and hopefully next week will be great, and we can look at and we can continue our discussion in WhatsApp, and discuss what happens, because as I said, it's very simple, and we will also be sending our Proflex macro update on Monday. But basic idea here is very simple, that we have a reversal here, we have a pivot here, which will be probably taken in the context of last press conference from Powell in terms of Jackson Hole, and this is going to be analyzed over many days now. So let's watch out what is the follow-up discussions, what is the market reaction, and things to watch is yields, things to watch is tech stocks, follow-up move, and finally NVIDIA earnings. So thanks once again, and have a great weekend. Bye-bye.